The AI stock market is exploding, and if you're not paying attention, you're missing out on a generational opportunity. We're on the verge of a massive technological shift, and a handful of companies are set to make a fortune. In this video, I'll break down 3 companies that are, in my opinion, the best plays in AI right now. We'll cover the unsung hero of chip innovation, a global manufacturing powerhouse, and the undisputed champion of AI processing. These aren't hype stocks, they're the backbone of the AI revolution. Grab a notepad, hit that like button, and subscribe so you don't miss the next big opportunity. Let's dive in. First up is Broadcom, ticker AVGO. While it may not be the first name that comes to mind when you think of artificial intelligence, Broadcom is quietly one of the most important companies in the entire AI ecosystem. It's a tech giant that operates behind the scenes, but its impact is absolutely massive. While flashy AI names like Nvidia and OpenAI grab the headlines, Broadcom is the backbone that powers the infrastructure those companies rely on. Every time you hear about a breakthrough in AI, chances are Broadcom's technology is working in the background, making it all possible. Their products are essential for the data centers that train and run the world's most advanced AI models. They're the picks and shovels play, building the networking hardware and custom chips that connect and accelerate AI data centers. Think of them as the unsung heroes, providing the high-speed connections and specialized silicon that allow AI workloads to move at lightning speed. Without Broadcom's technology, the data bottlenecks would slow everything down. Their Tomahawk switches are the industry standard, used by the biggest cloud providers and hyperscalers. And their custom silicon business is a game-changer, forging deep, recurring partnerships with tech giants like Google and Meta. These aren't just one-off sales, these are long-term strategic relationships that generate steady revenue, year after year. As AI models get bigger and more complex, the demand for Broadcom's technology only grows. Last year, AI-related products made up a huge chunk of their revenue. This year, it's projected to top $10 billion, which is over a quarter of their entire semiconductor business. That's a staggering number, and it's only expected to increase as AI adoption accelerates across industries. The VMware acquisition is a strategic masterstroke. It gives Broadcom a full-stack solution for enterprise AI, combining their hardware expertise with VMware's software capabilities. This means they can offer end-to-end solutions, locking in customers and boosting margins. It's a move that positions Broadcom as a one-stop shop for companies looking to deploy AI at scale. Financially, Broadcom is a machine, high margins, massive free cash flow, and a growing dividend that rewards shareholders year after year. Their disciplined approach to capital allocation means they're not just growing, but doing so profitably. Investors love the combination of growth and stability, and Broadcom delivers both in spades. Even with a premium valuation, their growth justifies it. AI revenue is set to double. Analysts are bullish because Broadcom's position in the AI supply chain is so entrenched, and their technology is so critical, that competitors have a tough time catching up. The company's forward guidance continues to impress Wall Street. Their lead in networking and custom design, plus deep customer relationships, create high barriers to entry. Once a company starts working with Broadcom, it's incredibly difficult to switch to another supplier. The level of integration and customization is so high that Broadcom becomes a true partner, not just a vendor. Once a company co-develops chips with Broadcom, switching is nearly impossible. The cost, time, and risk involved in moving to a new supplier are just too high. This gives Broadcom a sticky customer base and recurring revenue streams that are the envy of the industry. They're diversified too, supplying Apple and other markets, so they're not a one-trick pony. Broadcom's chips are found in everything from smartphones to networking equipment, giving them exposure to multiple high-growth sectors. This diversification helps insulate them from downturns in any one market. Risks? Sure, competition and supply chain issues exist, but Broadcom's fabless model gives them flexibility. By outsourcing manufacturing, they can adapt quickly to changes in demand and avoid the massive capital expenditures that weigh down other chip makers. This agility is a key advantage in a fast-moving industry. Bottom line, Broadcom is a critical enabler of the AI revolution, combining explosive growth with blue-chip stability. It's the kind of company that quietly dominates its niche, making it indispensable to the world's biggest tech players. It's not the flashiest stock, but it's building the foundation of the future, and profiting massively. As more companies race to build out AI infrastructure, Broadcom stands to benefit at every stage, from the chips inside servers to the software that manages them. Broadcom is operating at true mega-cap scale now, with a market cap of $1,640 billion. The stock trades at a price-to-earnings ratio of 73.03, and the company is producing earnings per share of $4.76. In 2024, Broadcom delivered $51.57 billion in revenue and $5.89 billion in net income, which highlights just how much cash-generating power sits behind its infrastructure and semiconductor footprint as demand keeps rising for data center capacity and AI-driven connectivity. For serious AI investors, Broadcom is a must-have. It's a stock that offers both growth potential and defensive qualities, making it a rare find in today's market. If you're looking to build a portfolio that can weather volatility while capturing upside from the AI boom, Broadcom deserves a top spot. Don't just chase the obvious, look for the companies powering the infrastructure. The real winners in the AI race aren't always the ones in the spotlight, but the ones making the tools and technology that everyone else depends on. Broadcom is one of the smartest, most strategic ways to play the AI boom. Its combination of technical leadership, customer loyalty, and financial strength makes it a cornerstone investment for the next decade. That's why it's a core holding in my AI portfolio. I want exposure to the companies that are essential, not just exciting, and Broadcom fits that bill perfectly. Let's move to the next essential player, but remember, sometimes the most powerful companies are the ones you don't see in the headlines, but you see in the results. Next up is Taiwan Semiconductor Manufacturing Company, better known as TSMC, ticker symbol TSM. If you've ever used a smartphone, a laptop, or any device powered by advanced chips, chances are TSMC played a crucial role in making it possible. This company is the silent giant behind the digital revolution, quietly enabling the world's most innovative technologies. If Broadcom builds the highways of connectivity, TSMC is the master craftsman paving every lane with the world's most advanced materials. Their expertise is in the art and science of manufacturing, the painstaking process of turning raw silicon into the brains of our modern world. Nearly every advanced chip you can think of, whether it's the processor inside your iPhone, the graphics card powering your gaming PC, or the AI GPUs driving the latest breakthroughs in artificial intelligence, are manufactured by TSMC. Their foundries are the birthplace of the chips that power our daily lives. What sets TSMC apart is their unique business model. Unlike companies that design their own chips, TSMC focuses solely on manufacturing. They don't compete with their customers, instead, they enable them. Apple, Nvidia, Broadcom, AMD, and countless others rely on TSMC to bring their designs to life with unmatched precision and reliability. Their edge, unmatched process technology. TSMC is the undisputed leader in producing chips at the smallest, most advanced nodes, 5 nanometers, 3 nanometers, and soon, an industry-first 2 nanometers. These tiny transistors pack more power and efficiency into every chip, keeping TSMC years ahead of the competition. No one else can match their scale or their yield. TSMC's massive, ultra-clean fabrication plants operate around the clock, churning out millions of chips with astonishing consistency. This scale creates a massive moat, an almost insurmountable barrier for would-be competitors. The explosive growth of AI depends on TSMC's ability to deliver cutting-edge chips, especially for companies like Nvidia. Every major leap in AI hardware, faster GPUs, more efficient processors, relies on TSMC's relentless innovation and flawless execution. If TSMC were to stop, even for a short time, the global AI industry, and much of the tech world, would grind to a halt. The ripple effects would be felt everywhere, from data centers to smartphones to self-driving cars. Demand for TSMC's manufacturing capacity is so intense that customers are willing to pay a premium just to secure production slots. In some cases, companies even prepay or sign long-term contracts to guarantee access to TSMC's state-of-the-art fabs. Financially, TSMC is a juggernaut. The company generates enormous revenues, boasts industry-leading profit margins, and has shown remarkable resilience, even during global downturns or chip shortages. Their financial strength allows them to invest billions back into research, development, and expansion. Of course, there are risks, especially geopolitical ones. TSMC's main operations are based in Taiwan, a region with complex political dynamics, but the company is actively diversifying, building new fabrication plants in the US, Japan, and Germany. This global expansion is designed to reduce concentration risk and ensure business continuity no matter what happens. By expanding internationally, TSMC is deepening relationships with key partners and governments, strengthening its position as a truly global player. This strategy not only de-risks their business, but also opens up new opportunities for growth and collaboration. Because of these risks, TSMC often trades at a discount compared to other tech giants. But for long-term investors, that discount can be an opportunity. a chance to own a critical piece of the world's technology infrastructure at a reasonable price. Just look at their customer list. It's a who's who of the tech world. Apple, Nvidia, AMD, Qualcomm, Broadcom, and many more. These are the companies shaping the future, and they all depend on TSMC to turn their boldest ideas into reality. As long as these industry leaders keep pushing the boundaries of what's possible, TSMC will continue to win. Their success is directly tied to the pace of innovation across the entire tech sector. TSMC invests billions of dollars every year into research and development, ensuring they stay years ahead of competitors. Their commitment to innovation is relentless, and it's what keeps them at the forefront of the semiconductor industry. And, as AI demand diversifies, TSMC is making custom chips for the likes of Google, Amazon, and Microsoft. These tech giants are building their own AI hardware, and TSMC is the trusted partner bringing those visions to life. TSMC stands at a market cap of $1,650 billion, and it trades at a much lower price-to-earnings ratio of 33.02, with earnings per share of $9.68. In 2024, the company produced 2.89 trillion new Taiwan dollars in revenue, and 1.15 trillion new Taiwan dollars in net income. That kind of profitability is a reminder that when the world needs more advanced chips, the picks and shovels provider with the most critical manufacturing capability can translate that demand into massive, sustained earnings. Investing in TSMC isn't just a bet on one company, it's a bet on the entire future of the semiconductor industry, with artificial intelligence as the main growth engine. As AI becomes more integrated into every aspect of our lives, TSMC's role will only become more vital. For anyone serious about the future of AI, TSMC is a must-own stock. It's the ultimate picks and shovels play, providing the essential tools and infrastructure that make the AI gold rush possible. In short, TSMC is the beating heart of the AI explosion, a company whose influence stretches across the entire tech landscape, powering the innovations of today and tomorrow. Now for the heavyweight, Nvidia, ticker NVDA. If you've heard anything about artificial intelligence, you've almost certainly heard about Nvidia. This company has become synonymous with the AI revolution, and for good reason. Over the past decade, Nvidia has transformed itself from a gaming graphics card maker into the backbone of the world's most advanced AI systems. If TSMC is the foundry and Broadcom the highway, Nvidia is the engine powering the AI revolution. Their chips are the heart of every major AI breakthrough, from self-driving cars to language models like ChatGPT. Nvidia's technology is what makes it all possible, processing vast amounts of data at lightning speed. Their GPUs are the gold standard for training and running large AI models. These aren't just any chips, they're the most advanced, powerful processors available, designed specifically for the complex math that AI demands. When researchers or companies want to push the boundaries of what's possible, they turn to Nvidia. Years ago, Nvidia made a bold bet on AI, building 𝗗𝗜𝗏, a software ecosystem that locks in developers and creates a deep moat. 𝗗𝗜𝗏 isn't just a tool, it's a platform that thousands of developers rely on to build, optimize, and deploy AI applications. This ecosystem effect means that once you start with Nvidia, it's hard to switch to anything else. Today, Nvidia owns about 95% of the data center GPU market for AI training, a near monopoly. Their dominance is so complete that competitors struggle to even get a foothold. This market share gives Nvidia enormous pricing power and influence over the direction of AI research and deployment. Companies like OpenAI, Google, and Meta have no choice but to buy tens of thousands of Nvidia's H100 or A100 GPUs. These tech giants are in a race to build the most powerful AI models, and Nvidia is the only supplier that can meet their needs at scale. The result? Massive recurring orders that keep Nvidia's factories humming. Demand is so high, they're sold out for months, and profit margins are sky high. Nvidia's ability to command premium prices is almost unheard of in the semiconductor industry. Every new product launch is met with a frenzy, as customers scramble to secure supply. Their next-gen Blackwell platform promises another leap in performance, keeping them ahead of AMD and Intel. With each new generation, Nvidia widens the gap, introducing innovations that competitors struggle to match. The Blackwell chips are expected to power the next wave of AI breakthroughs, from smarter robots to more advanced language models. Nvidia's strategy is to move up the value chain, selling not just chips, but full systems and even supercomputers. Their DGX SuperPods are turnkey solutions for enterprises that want to deploy AI at scale, without the headache of building everything from scratch. This approach lets Nvidia capture more of the value in the AI stack. This lets them capture more value and makes AI adoption easier for enterprises. By offering complete solutions, Nvidia removes barriers for companies looking to integrate AI, accelerating the pace of adoption across industries from finance to healthcare. The risks? High expectations and valuation. If growth slows, volatility will spike. Nvidia's stock price reflects enormous optimism about the future, so any stumble could lead to sharp corrections. Investors need to be prepared for a bumpy ride. But Nvidia's relentless innovation, massive R&D, and software moat make it hard to bet against them. The company invests billions each year to stay ahead, hiring the best engineers and pushing the limits of what's possible in both hardware and software. They're expanding into robotics, autonomous vehicles, and healthcare, huge new markets. Imagine a future where Nvidia chips power everything from self-driving taxis to surgical robots and smart factories. The potential applications are almost limitless, and Nvidia is positioning itself at the center of this transformation. Most enterprises haven't even started adopting generative AI, so the runway is long. As more businesses realize the value of AI, demand for Nvidia's products will only accelerate. We're still in the early innings of this technological shift. With a market cap of $4,590,000,000, Nvidia is valued like a platform company, and it trades at a price-to-earnings ratio of 46.75, supported by earnings per share of $4.04. In 2024, Nvidia generated $60.92 billion in revenue and $29.76 billion in net income. That spread between revenue and net income tells you how strong the operating leverage has become, and why so many investors see Nvidia as the primary beneficiary of the ongoing build-out of AI data centers and accelerated computing. Investing in Nvidia is a bet on their continued dominance and the explosive growth of AI. It's not just about chips, it's about owning a piece of the infrastructure that will define the next era of computing. Yes, the stock is expensive, but the growth is unprecedented. Few companies in history have managed to reinvent themselves so completely and capture such a dominant position in a critical market. For those who can handle the ride, Nvidia is the purest play on the AI boom. The journey may be volatile, but the potential rewards are enormous for patient investors. They're years ahead, and the market is only getting bigger. As AI becomes more embedded in our daily lives, Nvidia's role will only grow, making them a foundational player in the digital economy. Nvidia is the undisputed leader in AI hardware and a cornerstone of any AI-focused portfolio. Their influence stretches across industries, shaping the future of technology itself. So, as you consider your next move, remember, Nvidia isn't just a stock, it's a front-row seat to the AI revolution. The question is, are you ready to be part of it? So, there you have it. Broadcom, TSMC, and Nvidia, three titans at the core of the AI revolution. Each plays a unique critical role, and together they offer a powerful, diversified way to invest in AI's future. Want more exclusive stock tips and in-depth analysis? Join the StocksGalore Patreon. Link in the description. Now, I want to hear from you. Which of these three AI stocks do you think has the most potential for growth? Drop your thoughts in the comments. Don't forget to like, subscribe, and turn on notifications so you never miss an update. Thanks for watching, and I'll see you in the next one. Stay smart and happy investing.